Ultimately, it's a hit job, isn't it? Why would Riyadh risk its leadership role in OPEC Plus and its credibility as the architect of OPEC Plus discipline just to sneak out a few 100,000 extra barrels?
Look, I think it's fair to see last month as an anomalous month, given what was going on in Iran. It should not be taken in and of itself as a sign of a departure by the Saudis from the OPEC quota system, which they've been the primary enforcers of and one of the best adherents to going back many years. But again, I think if you're looking at the way the market is seeing this, there's a lot of concern in the market that OPEC, and when they say OPEC, they really mean the Saudis, could revert back to a price war scenario in order to enforce compliance within OPEC and in order to regain market share versus the rest of the world. So when you have that context in the background, this little bit of oversupply, which, as you say, it shouldn't really be normally have too much read into it, can see a lot more being read into it by the market because it flows into this narrative that we could hit oversupply into the fourth quarter of the year.
Indeed, and all of this also comes back to how these barrels are tracked and counted as well. What do you make of this new debate emerging about how all of this should unfold? Should oil trackers use supply to market instead of production when it comes to counting compliance?
Well, look, I mean, what would be best for the market is if we had transparency over both. There's another element here, of course, which is also the increase in refined products that we're seeing out of OPEC, particularly the Saudis and the UAE, where they can choose to actually market less volumes for export of crude, but actually then divert some volumes and see it actually marketed as crude products. And we've actually seen that development over the last couple of years, where remember, we've seen market share being ceded by the Saudis and the UAE in crude, but they've regained a lot of that. And so the actual revenue's been quite strong from overall crude and product exports. And so we need to be moving, I think, to a much more nuanced view and analysis about OPEC and Saudi and the UAE in particular, where we're not just looking at production of crude and what they market, but also what they're doing on the product side, and particularly with a focus on the medium and the sour barrels, where they have a lot more dominant market share, which is critical for a lot of refining complexes, you know, once you take out those lighter crudes that are coming out of the US.
Saul, I spoke with the OPEC Secretary General on Friday off the back of the OPEC seminar in Vienna. And what was interesting, against the backdrop of this conversation, we now also have OPEC's World Oil Outlook report and the IEA's latest assessment of where global oil demand is tracking. What's your take on who has the most accurate assessment of what oil demand is going to look like out to 2050? The OPEC group saying we're going to see 123 million barrels worth of demand by 2050, but of course the IEA has long said we're going to see peak oil demand before that. Has your view changed on who's actually calling the market right?
Look, I think we need to acknowledge that the IEA got it particularly wrong in the wake of 2020 and 2021, where their outlook for the scope of decarbonisation policy and hence much lower oil demand has been proven to be drastically wrong. And in particular, it was quite clear it was unrealistic to begin with from many industry insiders. And so they've lost a lot of credibility in that regard. The OPEC outlook, and I should say the outlooks from a number of other respected consultancies in this regard, have always had a much more pragmatic view. And that sees a much more robust demand outlook for both oil and gas through to 2050 and beyond than what has been hoped for by the IEA and some other Western governments who've taken, I think, a very fairy tale view on the way decarbonisation policy could play out.